Bill Feely, and I'm here with another edition of MSATP TV. Joining us today is Jonathan Pocius with Payroll Services. And before we go over to Jonathan, though, I would like to just reiterate an announcement. As of last night, the IRS has delayed tax filing season by 1 month. So the new filing deadline date is May 17th, and that's a due date for both filing the returns and making your payments. The only thing that was not included in this delay of a month is the first quarter estimated tax payment that's still due April 15th. So just a reminder, the filing deadline is May 17th, and we'll go from there. So now I would like to turn it over to Jonathan, who will talk about payroll services and what they can do for us as members and being one of our corporate sponsors. So Jonathan?
Thanks, Bill, for having me on. Yep. Many of you guys have probably already know me. We've been sponsors of MSA for over 8 years, and we've actually been helping MSA out with their individual payrolls for about 7 years now. I mean, boy, time flies, doesn't it, Bill?
Yes, it does.
So our core business, we are what's called a workforce management company. So payroll, as you guys know, is changing drastically. So we help clients with payroll, HR, time and attendance, employee benefits, workers' comp, and more. We have a very in-depth system. It can go up to 3,000 employees. We typically like to say between the 1 and 1,000 range. We have clients with 1 employee, we have clients with 1,000 employees, and everything in between. So we offer fully scalable features. And the big difference between us and a lot of the larger providers is we really try to focus on professional services, whereas a lot of the larger providers really sell software. And that's where a lot of the larger ones are starting to go to. They'll sell you software or a solution, but it's lacking on the professional services. So when we partner up with clients, we really are looking for a good fit. We'll do your payroll if that's all you want us to do, but we're really looking for businesses that are looking to try to get things in line, up to date, and kind of efficient and in compliance. And that's really where our professional services hits in.
Okay.
Some of the things that we do with MSA is we have special programs for CPAs and accountants that refer us business. We also have different programs where we are working directly with accountants that process payroll in-house. That's actually been a really big section of what we've been doing over the past year with COVID and everything happening. So if you're processing payroll internally and you're looking to streamline that or get a little bit of a better solution, we do have programs where you can basically control the front end of the house where you have all the client communication, and then we handle all the back end of the house and make sure that the technology is working for you, and we support you, the tax deposits, direct deposits, you name it. And that has really helped out a ton of accountants with COVID because of all the new regulations that are coming out. And as I was telling Bill earlier, every day is a new day in payroll land. It's just completely different. And things are, now that Congress has figured out that they can throw a lot of things to payroll now, they've kind of opened up Pandora's box, which is really becoming more problematic for accountants that used to process payroll internally, because you may not have had to worry about, COVID sick leave. You didn't have to worry about the PPP. You didn't have to worry about ERC. We do suspect to see some type of nationwide mandate on paid leave. We also plan to see some new regulations that are coming out. And then even with the minimum wage laws, all the jurisdictions now are a little bit different as far as what they have to abide by. We do service in all 50 states. But mainly our main core business is clients are located up and down the East Coast, but we do service all 50 states, and we have employees in about 48 states right now.
All right, very good. Could you tell us a little bit about the ERC, the Employee Retention Credit? Yeah,
the ERC is a fun one, and I'm sure you guys as accountants and advisors are getting lots of questions about it. As you know, the ERC really was one of those things that flew under the radar back in 2020 because businesses could only choose the PPP or the ERC, and most people just jumped for the PPP, so nobody really cared about the ERC. And, in December of 2020, Congress changed those rules that now that you can do both. So now there's a lot more complications involved in the ERC than it was if they just had the ERC instead of PPP. There's different rules for 2020 now and 2021. We are probably one of the experts in the ERC area. We do help out other payroll service providers. They do call us and we do work for them on ERC as well. Our company is unique in the ERC where we do two things. One, we actually assist in the calculations, and I'm sure a lot of you have gone through some continuing ed or had webinars about it. We are finding that the understanding of the ERC in the business community, whether it's accounting, law, whatever the case is, there's a lot of things that they're missing inside there. And with the way that the PPP and the ERC function together, it's not a straightforward calculation where you just drop your covered period and then you just use wages in there. You have eligibility dates of when, if they were suspended, if they had revenue declines, and then we balance that out with the PPP. So payroll services takes it under the consideration of where we start our strategy of is how do we maximize the ERC first, and then we balance it back with all the PPP regulations. So we actually go back and we do all the retro calculations for our customers for 2020. We discuss with them what makes them eligible, if there's partial suspensions, full suspensions, if there's revenue declines. So we go through all of that with them. We then get all the information and then we run an analysis for 2020 so we can do the retro credit, and then we handle all the amending of all the forms. So we're very unique in the side of the 2020 side where we are really a full service feature with the ERC, where most payroll companies don't want to get into it because of the workload that's involved with it and the calculations, how complicated they are. For 2021, we also do something very unique in the payroll world, is where we actually take live credits on the payroll. So even if a customer actually is earning credits each payroll, we actually can apply those credits to their federal payroll taxes, obviously the 941 taxes, and the client doesn't pay that. So we don't draft the client for those 941 taxes, and then we handle the carry forward of the credit. The other thing that's unique with it is, again, is the understanding. Anybody that got a PPP2 loan will need to go back and do retro analysis to maximize the ERC. So what I caution everybody when I talk to them is the ERC calculation is not simple math. It's not this times this, and this is what you get, and then you stop it at this date. To maximize the credit for our clients, the diligent thing to do is to go back after the covered period's over and to do a reanalysis of the entire period to reallocate wages between ERC funds and PPP funds. That also means that we have to amend returns again. So when we engage with a customer with ERC, we explain this process and we make sure that they understand how everything works. We also go a step farther where we actually help the client project out their PPP2 usage to make sure that we can try to capture as much ERC upfront as possible. So for us, the strategy is we want to see clients take a portion of ERC, at least at the minimum, at the front month of the calendar quarter. So obviously for second quarter, we want to see clients capture ERC for April. The reason why we do that is because these credits can carry forward every single payroll throughout the quarter. So if we can be conservative in our projections and we can figure out, hey, we can take 3 payrolls in April and apply those credits, that'll allow the client to receive cash now. So the big thing about the ERC and what we do is we understand that the clients need cash now. And so by doing these projections, by doing these analysis, we can actually put money in the client's pocket now by them not having to pay the federal tax liabilities. And then once things become more certain in the number side of what they've done with their PPP, we can go back, do a reanalysis, and then we can maximize the ERC credit. It's huge. I mean, if you think of it, Bill, we've talked about it. If you pay 7 employees $40,000 a year, that's 70 grand 70 grand a quarter if you qualify for 2021. It's huge money. It's 70% of the wages, and it resets every quarter, which is unique from the 2020 rule. So, that's the one thing that I always caution people when I talk to them, whether it's accountants or whoever the case is, be careful, make sure you know what you're doing with this, because even let's say you get your client a $30,000 refund, the client's going to be ecstatic. But if you could have gotten them a $60,000 refund, did we really do our job the right way? And that's what we caution people. It's all about right now. Bill, you're an accountant. I come from an accounting background. Our job is to maximize the law for our customers and get the biggest refund possible. It doesn't matter. It doesn't matter our political view on it. So if Bill, if I can only get them 30,000, but you can get them 60,000, and you're in the confines of the law, the client should be going with you because I didn't do my job. And that's really where we would caution accountants with this. What we would recommend with accountants is, and as a payroll company and in what we're seeing in the industry, as accountants, my suggestion for a revenue, like if I was in an accounting firm right now and building it, I would not focus on ERC. Because even though you do ERC calculations, let's say all those rules, the payroll provider has a lot of work behind the scenes. So it's going to be almost double billing the customer, and the payroll company, if they're doing full service, and again, that is rare. We work with other service bureaus and we're helping them do this on the backside. The payroll company should be equipped to handle this much more efficient than accountants can. So what we would recommend and what we are doing is accountants should really focus on PPP forgiveness right now. That right there is a big help to the customer, and payroll companies now are pushing back on clients, even us, because we don't have the bandwidth anymore to do this. With all these new regulations that are coming out, there's just way too much, and a payroll company was never staffed. No company was ever staffed to deal with the unforeseen regulation that we've been clobbered with right now, right? It's tough. So PPP forgiveness is where we are pushing it back to the accountants, and then we're working with the accountants to get information for it. And that's really where we see us being able to work best right now with accountants with it, because we get accountants that'll try to say, hey, we'll give you the calculation for the ERC. Well, there's still a significant amount of work on the backside for us to do with it. So we're kind of at odds between what we have to do versus the accountants. And a lot of this just, in all fairness, people don't know what's going on the back of the house that has to make these ERC things work appropriately. So that's where we are trying to advise accountants when we talk to them about it, is to take up on the PPP forgiveness, because there's good money in it to help clients with the PPP forgiveness. It's much more form oriented, which is accountants are great with that stuff. You're great with getting all that documentation together and things like that. So that's really helpful, what we're finding to the client base that we serve.
Okay. So if I had a payroll client that I think was entitled to the ERC, would you look over those quarterly tax returns and things like that, and
Yes.
then help me, or you do the ERC calculations and everything,
Yep.
so that
Great.
we can amend the returns?
So it depends on the program that we're deploying with the accountant. If you have a lot of them, then we will structure a special deal with you where we will do that work for you and turn it over. And then we'll structure how that would work for compensation. Typically though, what we do is we only do, on a normal basis, we only do the ERC credit for clients that we are also providing the payroll for, because there's so much that goes involved with it. And to do it right, remember, we're at the stage of our business where I'm not interested in just signing on anybody. We're more interested in signing on to do it the right way. So in order to do things the right way, we really need to be working with that client a lot more than just, hey, give us this data, in order for the client to get the maximum use of the ERC right now. And that's really what it is. Because remember, Bill, this, there's still businesses out there struggling. So if we can get them money now by reducing their total payroll costs, that is such more of a service than just doing it after the fact. If we can shave $3,000 off their payroll, their payroll costs each pay period, versus them having to wait, 120 days for a refund, we're helping them now. Payroll is one of the largest costs for small businesses. And if we can shave all that federal taxes off, it's really helping them out.
Okay. Very good. Now, with the new tax law that the president signed into place last week, Was there anything in that law that pertains to the payroll services?
Yeah, there's quite a bit. Unfortunately, we'd ask them to stop. Every time the Congress gets together, I'm starting to drink. So there's two things with it. The first one is the COVID sick leave. Okay, this is the big one, there's two major changes with it. First, COVID sick leave is not required to be offered anymore by small businesses. It is a voluntary program. When I talk to clients about this, I tell them it's voluntary, but you still get all of that refunded back to you. So it's still a credit back to the employer with it. And so I always encourage employers participate in it, right? If they're going to pay the sick leave for an employee not being there, go ahead and do it. So that's one of the major changes, is that when they expanded it, and this was part of the 2020 expansion, is that it wasn't required anymore. And it's still not required. The big thing is they reset the balances as of April 1st. So all of the balances that employees may have used already, you basically start from zero again, and they can go ahead and accrue it. There are, the same three different types of COVID. So we have the employee sick leave, we have the family sick leave, and then we have the expanded family sick leave. So there are different, three different buckets that have to be taken under consideration. The pay rates are very different for all of them. The other big one that they changed with the expanded family leave is that it used to be with the expanded FMLA is that they would give you 12 weeks, but the first 2 weeks were unpaid. Well, they removed that, and now the first 2 weeks are paid. So now it's a full 12 weeks of paid leave versus 10 weeks of paid leave, and then 2 of the unpaid. So that was a really big change with the COVID sick leave. I'll be honest, clients are still struggling to understand this because there's different rates. For example, if they're home with a family member, it's a 2/3 rate, where if they're sick, it's 100% of the rate. So clients are still struggling with that. I can tell you, QuickBooks doesn't do it right. So if you have people that are on QuickBooks, you're probably familiar with that. You've had to finagle all of this and some of those things. So in our system, we actually set those up as accruals, and then we link those together so employers can actually get real-time balances of what the employees are looking like with it. The other big change to the COVID sick leave was that they've now included for better terms, anything related around the vaccination side of it. So if an employee wants to go and get vaccinated, they can use this COVID sick leave. And if they have any type of side effects, or if they're under the weather, which I hear a lot of people are for the first couple of days, that COVID sick leave does come into effect for that. So that is one of the big additions to this bill. Now, I apologize if I have this date wrong because I don't have my notes in front of me, but I do believe that it expires on September 30th. So it goes from April 1st through September 30th with it. That was one of the big changes with the COVID sick leave that it came out with it. The other big one that came out was the expansion of the employee retention credit. The employee retention credit now is all the way through December 31st. That's why it's really, really important to make sure that your clients have a good payroll company that understands the ERC rules. We're still talking to new prospects that don't understand the rules, and it's huge money. Like, regardless of your political side, or if you think this is a good thing or a bad thing or whatever, it's money on the table for our clients. My perspective of my job is to get the maximum amount for my customers right now. And
Right.
That's what I continue and encourage you. So, if you have questions about the ERC, we recommend obviously having a basic understanding of how it works. Outside of that, contact us. So I have accountants calling me all the time. I just talked to another guy yesterday. It almost seems like every day I get a call from somebody talking about ERC on the accounting side. Call us. We'll help you out. We'll kind of give you some guidance with it. The big ones, especially in Maryland, is still the partial suspension. So, if a company is considered partially suspended, For example, if restaurants aren't allowed to utilize their dining rooms to the fullest capacity, that is considered a partial suspension. So even though, like Hogan just said, hey, restaurants can go to 100%, well, the Department of Health for it said, no, you can be 100%, but you have to be spaced out 6 feet still from your tables. That is still considered a partial suspension. So to understand these partial suspension rules is really, really important. There's also a lot of confusion about the relationship test. I talked to an accountant last night about it, where the relationship test on who's allowed to be covered in the ERC there's some confusion with it. So if you have questions about that, please, contact us about it. We are very good with the ERC with this. We know how this works. And when we talk to clients, there's the IRS FAQ, which, Bill, as you know, is kind of like the bumpers when you do bowling, right? It prevents you from rolling a gutter ball. And then there's the law, right? What does the law state? So when we talk to customers about their situation, we present it from both sides. In the confines of the IRS FAQs, hey, these are your safety guards, and then this is what the law states. Okay, in between, there's all the gray area. So what we try to do is we try to explain to businesses the audit risk that may be posed to their account, being in that gray area, because ultimately I don't want one of Jonathan's customers to be the test pancake for the IRS, right?
Okay.
And so when we look at these, and when we advise people, they ultimately have to make the decision, just like when you advise people, right? You give them the advice, you give them, hey, we can do this, but I think it increases your audit risk. If we don't do this, you're going to lose this, but I think you're going to be okay, right? That's what we do with it. And we try to give them an idea of where they fall on the audit risk. At this point, money's a relative term. If you have 10 employees, you're a small business. You're a small business, and $70,000 in a quarter to a small business owners. Let's say you get 4 quarters. 7 times 4, it's huge. $280,000, right? That may seem like huge money. The IRS looks at that and goes, "That's nothing." Right. So we look at that and we try to figure out where do they fall inside of the audit risk, and if they are in that gray area, because the law that was passed and the language that was used is very different than the IRS FAQ. So as we scale and we get larger clients, like we have customers that have over 100 employees, 200 employees, 300 employees that qualify for ERC in 2021. When we get to that size, we really like to stay within the IRS FAQs and what we see coming out from the IRS, because the audit risk is much higher for those guys. If you have 10 employees, I'm not saying to do this, but in that gray area, there's more of a comfort that you can be in the gray area and reduce your audit risk. Again, just like you guys face every day with certain deductions and, home-based businesses and things like that with it. It's the same thing right now for it. So we really our job is to educate the customer and then allow them to make the decision on what they want us to do. At the end of the day, I'm a reporting agent and that's it. It's your job to make the decision.
Okay. And maybe you could tell us a little bit about how we can get in touch with payroll services about onboarding some of our clients for you to help out, and what we can do to help you.
Sure. So the best thing to first do is, if you have questions, is to call me directly, okay? Which is 240-215-4438. Now, please don't send me any pizzas. I don't need any of those. But if you have direct questions about the ERC or anything like that, call me directly. You can also visit us at our website, which is payrollservicesllc.com. Or you can simply send me an email at John, Jon, P as in Paul, at payrollservicesllc.com. And I'd love to help you out. Okay.
And what would you say is an ideal customer for you right now?
Excluding the ERC or
excluding the ERC.
Yeah. The ideal customer for us really is, it doesn't have to be an employee size. It really is the mindset of the employer. We are not interested in people that are just looking to penny pinch. We really are looking for people that want to get their whole workforce management taken care of. The biggest bang for the buck for our customers is when we're doing additional things with it, whether it's timekeeping, HR, health insurance, workers' comp, or whatever. And the reason is because all of that flows together with payroll, and it really does make the life easier on the business owner or whoever's handling it, because now everything is in a single system. There's single point of contacts and things like that. If you have clients that have 75 or more employees, we really can help those guys out, because a lot of times they have a lot of inefficiencies inside their business environment right now.
Okay. All right. Well, I'm going to wrap this up here now. I appreciate you taking your time to spend some time with us. I hope the members get something from this, because I know I have, and we'll go from there. I would like you to give out your phone number one more time, just in case.
Yes, sir.
So
it's 240-215-4438. And that's my direct line.
all right. Well, hopefully your phone will start ringing here shortly, and you'll get a lot of business out of it. The other thing that I wanted to remind you is for the convention in June, June 1st, 2nd, 3rd, and 4th, we will be doing a live convention in Ocean City. So I hope that you can find some time to come down and enjoy the ocean, spend some time with us. We'll be having seminars and things like that there, and start reconnecting with our members after a whole year of being away from them.
I look forward to that.
Yes, me too. Well, thank you very much. You have a great day, and we'll talk to you soon.
Thank you.
Bye.